गुलाटी गुंबर। आइए आपको सीधे चलते हैं आरबीआई की एमपीसी की जो बैठक हुई है उसके बाद जो प्रेस कॉन्फ्रेंस हो रही है उसमें।
Basket, and will they remain sticky?
You see, each component of the food inflation, or let me put it this way, each component of the headline inflation, and beyond that, each component of the food inflation, the core inflation, and the fuel inflation, each of the components, the momentum, that is the month-on-month momentum, are very closely examined by the MPC and by our research teams within the RBI. And based on that, we give out certain statements. Like, for example, I have said that the moderation in vegetable prices in the last 2 months, that is in November and December, they more than offset the price momentum in cereals, and I have mentioned 1 or 2 items there. So we are examining all these components, and the future trajectory of each of these components, the month-on-month momentum, it's all built into our projections.
Thank you.
Thank you, sir. I'll invite Mr. Vishwanath Nair from BQ Prime to ask his question.
Good afternoon, Governor. In your statement, you mentioned that banks have come out of this chakra view of excess liquidity. You're also pointing out that the deposit rates are rising between May and December. You pointed to 13 basis points on weighted average term deposit, fresh deposits. Having said that, since the last policy, the gap between the credit and deposit growth has reduced, but it still remains quite wide. As the prospects for credit growth are rising sharply still, how long can banks continue having this 400-500 basis point gap between the credit and deposit growth rates?
You would like to take that, or Jain will take that? I think I would request DG Michael Patra to take that question, and DG Jain can supplement thereafter.
Yeah, as you point out, the difference has narrowed, but there is still a difference, and it's really up to the banks to mobilize deposits and make up the gap. They are doing so through certificates of deposit and reducing their non-SLR investments, but they need to mobilize deposits on their own to meet the gap.
Thank you, sirs. I'll invite...
Just a moment. I would request DG Jain to supplement.
Okay, I will supplement what Dr. Patra has talked about it. There is an increase in the deposit side also. The sources of funding we have analyzed, and we have seen that the sources of funding are coming from deposit as well as the borrowings. The CD ratio as of now for the banking sector has increased little bit, but still reasonable within the range. And the liquidity coverage ratio is still at very comfortable level, much higher than the regulatory prescription of 100%.
Thank you, sirs. I'll invite Ms. Lata Venkatesh from CNBC TV 18 to ask her question.
Thank you, Yogesh. Governor, 2-3 questions, please. So this real policy
rate... You can ask one, because...
The real policy rate, you said that, now 5.6 inflation and 6.5% repo rate. But the 1-year T-bill is trading at 6.95. So effectively, if you take 5.6% inflation, the real rate is already about 140 basis points, 130 basis points. Will you be guided only by the pre-COVID, which was, I think, 230 basis points difference, real positive rate? So what will guide your decision to pause? Or will it be also actions of other central banks? And if I may, so what is the total exposure of the banking and the NBFCs to the Adani Group? Because we just heard that REC has 7,000 crores. So is there a number that you all have already assessed? And if you can tell us whether you would be cautious that that number shouldn't increase.
Okay. And now the first part of the question, relating to that real rates and all, Dr. Patra can take, then I will take over the next question. I mean the next part of the question.
So as you point out, we have nudged
Put the mic on.
We have nudged the real policy rate into positive territory. What its level will be decided by the evolving macroeconomic configuration. So it's not necessarily guided by pre-pandemic levels or anything, but by the evolving growth and inflation trajectory.
But 130 is big, no real rate?
No, actually, we're talking about the real policy rate, right? So you take the policy rate and adjust it for 4 quarters ahead inflation, as we've always done, and you get less than 1%. You get 0.9. Okay. And about foreign banks and all that, we take into account all developments in the world, but monetary policy has an exclusive domestic orientation and it will react to domestic developments.
Now, with regard to the other part of the question about the exposure of the banking sector to the to one particular business conglomerate, we have issued a press release on last Friday. I have nothing more to add to that. Individual cases and their numbers, as you are aware, we do not discuss in the public domain. Having said that, let me mention in addition, because so many questions are being raised in the public domain, in the last 3 to 4 years, the Reserve Bank has taken a number of steps to strengthen the resilience of Indian banks. We have come out with clear guidelines to regulate the governance in Indian banks. We have issued guidelines about the functioning of the audit committees. We have issued guidelines for the functioning of the risk management committees. We have now made it mandatory for appointment of chief risk officer in banks. We have also made it mandatory for appointment of chief compliance officers of the banks, and we have given through our regulations the desired level of autonomy to the chief risk officer and the chief compliance officer with regard to his functioning within the bank. The chief risk officer, for example, reports directly to the audit committee. And there's so many other regulations which I am not going into. We have also rationalized in the last 2 years the large exposure norms, and all that I would like to add at this point of time that the Indian banking sector, including the the NBFC sector, since you referred to a couple of them, the Indian banking sector and the NBFC sector continue to be resilient and strong. Thank you.
Thank you, sir. I'll move on to Mr. Anup Roy from Bloomberg. Request him to ask his question.
Thank you, sir. Sir, a couple of countries in the Southeast Asia region, they are now warning about inflation and the resurgence of inflation, and you are also seeing inflation to be sticky, the core inflation to be sticky. So, what is your? Do you fear a resurgence of inflation back, sir?
No, we have given our roadmap, we have given our projections, our projections we have given out now for 23-24. And we have also highlighted all the upsides and all the downsides. And beyond that, it is not possible for me to, say anything else. And as regards the level of inflation in other countries, that does not impact our decision making. Our decision making will be governed by the domestic factors. And also one more point that has to be kept in mind. See the gap between the inflation target in in several countries and where their current inflation is. The gap is much wider compared to our target and where our inflation is.
Sir, if I may ask one more question. So today, you have, hiked by 25 basis point, and a lot of analysts were thinking that you will give a clear tone that we are going to pause, but you are in no mood. So clearly, inflation is very much there in your mind. So, will you ever give an indication that we will pause here?
Currently, our mood is a mood of optimism.
I'll move on to Ms. Anshika Kayasth from Hindu Business Line. So that's it.
Please press the mic.
Yeah.
Yeah.
So you mentioned that you'll be issuing directions on penal charges for financial institutions. Just wanted to understand what has been what prompted this and what has the RBI observed so far? And second, just quick question, what is the sort of preparedness level? I know you started getting feedback on the ECL draft framework. What has been the sort of feedback and comments so far, and by when could we expect the final guidelines, and what is the general preparedness level of banks as of now, according to you?
Okay, I would request Deputy Governor Rajeshwar Rao to take that question, both the questions.
Thank you. Now, regarding the first issue of penal charges, basically the supervisory reviews which have been conducted by RBI, they have revealed that most banks use penal rate on top of the normal interest rate in case of payment defaults and non-compliance with the terms and conditions of the credit facility, sanctioning the credit facilities. The reviews indicated there are diverging practices and there were excessive charges in some cases, so they were leading to grievance and disputes. So essentially what we are trying to do is we are trying to frame guidelines which will ensure that there will be kind of a transparent and uniform approach to this issue. So that is the background under which we gave the we're proposing to issue guidelines on the penal charges. Now, as far as the ECL norms are concerned, I think I think the ECL norms, it's generally assumed that the ECL norms may be higher than what is there under the current approach, but that may not be necessarily the case in all the cases. So that is one point. And if you look at the position of the banks, the current position is that in terms of the financials, the banks are well prepared to absorb it. In fact, the PCR ratios have improved to about 71.5% in September 22 as compared to 68.1% last year. And the discussion paper has been placed in public domain. We are expecting the comments to come in by February end, and maybe shortly thereafter we will propose to issue the final guidelines, taking into account the feedback being received from the public. Thank you.
Thank you, sir. I'll move on to Mr. Ajay Ramnathan from Financial Express.
Good afternoon. Governor, this is regarding the National Financial Information Registry. Now, it was announced in the budget and we believe that a draft is ready. So, I just want to know how this will differ from the credit information bureaus that we already have.
I think DG Rajeshwar Rao can take that question, and if you want to supplement. Okay.
There have been consultations between RBI and the government on this NFIR bill 2023. Further course of action will depend on once the bill is passed. And as far as the NFIR's role is concerned, I think we expect it will contain ancillary information over and above what is already being held by the credit information companies.
There will be a lot of additional information, which will be, part of this new registry that we are envisaging, and it's under discussion with the government. I mean, a lot of discussion has already happened, based on which the government has announced it in the budget.
Thank you, sir. I'll invite Ms. Chloe Cornish from the Financial Times to ask a question.
Thank you, Yogesh. International banks were key financiers of the Adani Group. Moody's and other agencies have said that the Indian banking system is not badly exposed to the Adani Group, unless they start to become major lenders to the group, which may become less able to avail financing from international lenders. Fitch actually said there is a tail risk that fallout from the controversy could broaden and influence India's sovereign rating. Will you be giving any guidance to domestic banks about their exposure to the Adani Group going forward?
You see, I think I have replied whatever I wanted to say. We have made our own assessment. I mean, other agencies make their own assessments. In the Reserve Bank, we have made our own assessments. And I have said whatever I just said a little while ago and whatever we said in the press note based on our assessment. The large exposure guidelines prescribed by the RBI are fully complied with by all the banks. And so far as the, Indian banking system now, the total, the strength, the size and the resilience of the Indian banking system is now much larger and much stronger to be affected by, an individual incident or a case like this. The banking system is strong, and also you saw I think this whole perception is coming because of the market capitalization of the shares of the group. When banks lend money to a company or to a group of companies, the banks do not lend on the basis of market capitalization of that particular company. The banks lend on the basis of the strength of their company, the fundamentals of their company, or the strength and the fundamentals of, their analysis if it's a greenfield project, the anticipated cash flows, and so many other things go into the appraisal of, the banks. And the appraisal methods of Indian banks have significantly improved over the years. So I think I would just reiterate again that the banking system is stable, continues to be strong. DG Jain, would you like to add anything?
Governor has already explained that our domestic banks exposure is against the underlying assets.